Okay, great. Um, so I have a slide deck, and I'll be honest and say there's a lot of slides. But if you do have a question, just put your question in the chat, and I will stop and respond to your question because I feel like I don't want people to be polite and like wait to the end and then, on slide 3 there was something you had a question about. If you have a question, put it in the chat and I will take a brief break and say, "Oh, there's a question," and try and explain, whatever it is. So with that, I am going to share
Good
my
luck.
slide deck.
You
Okay.
have your phone? Yeah.
Hopefully you can all see my screen. Um, This is about getting ready for the 2025 tax returns, which are filed in the spring of 2026. Um, I know a lot of people can just really get down during tax season, like it seems like so much. And so what I'm hopeful is that as I go through these slides, I'm going to show you forms, I'm going to explain some concepts, and hopefully that, reduces the concern a little bit about, how, oh man, I have to spend the whole weekend doing this. So hopefully these concepts will be easy as I go through them and explain them and show some forms. Um, so I will start with saying, 2025, crazy year, although it wasn't as crazy as earlier this week with all the snow. But, um, that was a long year. I know a lot of providers kind of went up and down with enrollment. I know there were some who have staff and they had staffing challenges. I know, it's not quite 2020 with COVID, but people get sick and we're more conscious of that now. And, cleaning related to, trying not to spread germs and all of that can be some anxiety. Um, People had fluctuations in revenue depending on that enrollment. And of course, increased costs. I know particularly food. Food is much more expensive now. And there may have been some government funds that people received. So that's something else I'll go over. Maybe it's the food program or maybe it's childcare subsidy. So I will go over that. Um, so as I said, this webinar is about filing during the spring of 2026, which reflects income earned and expenses in calendar year 2025. And I'll talk about handling grants. I'll talk about common tax deductions. I'll talk about the basic forms. I've done screenshots of the forms so I can show you kind of this goes here, this goes there. Um, I'm going to spend time talking about maximizing your income. And what does that mean? It means, there are a lot of rich people out there that have somebody high paid who finds them every possible deduction and they get it and they're able to really lower their
Time.
taxes by a lot. So what I'm hopeful is when I go through some of these common deductions, you can jot them down. As I said, I'll make the slides available so everybody can have them. But the way to really maximize your income is to take all the tax deductions that you're eligible for and make sure you scoop them right up and claim them because that reduces your taxable income and that means you pay less in taxes. I'll also talk a little bit about record keeping because the way you keep your records is also related to some of the deductions that you can take. So I will show you some things on that front too. And of course, Q&A. I'm glad to answer questions. I want to say up front, I am not rendering legal, tax, or other professional advice. If you require this type of assistance, please consult a professional to represent and or work with you. What I'm going to do is really talk about tax policy so you get the concepts. I'm not going to make you a tax expert. That's not really my goal. But my goal is to share knowledge about, the tax policies, the deductions, the forms, so that you can be that educated consumer when you do your taxes and you are better equipped to have that conversation. Even if you go to, H&R Block or some other CPA, you are better able to engage them in discussion about your tax situation and deductions that you may be eligible for. Just again, to make sure you take everything that you possibly can. So income, we will talk about income first. The slide that I have right here, that basically is showing the 1099. What is considered income? Payments from parents, that's considered income. Any type of state grants or federal grants, like the food program, or if you got a check or subsidy from DFD, the Division for Family Development. If
Bye. Good luck.
If you get subsidy or you get food program or you get another grant from a state agency, you should get a 1099 in the mail. And on this 1099, and you can see the screenshot, line 1, it says non-employee compensation. That means income. So I put 3,000 in there, which could represent, an amount for a child care subsidy, could represent an amount for a state grant program. But I put it in there as a sample that if you receive more than $600, you should get a 1099. Not from parents. Parents, that's not from parents. They make, payments to pay for their kids. But I'm saying from an organization or from a state agency, if you get income of some type and it exceeds $600 for the year, you should get a 1099. Excuse me, there's 10 people who entered the waiting room, so I'm just going to quickly let them in.
Grace, if you want to make me co-host, go for it.
I know how to do that, Tiffany. I would totally do that.
Oh,
Let me
okay.
see if I can figure that out.
Okay, I think if you click on me, you can select the co-host on your right button or left on your mouse.
Yeah, but now hang on. I think I have to get out of the slides to do it. Like I don't see those buttons when I'm in the slides.
I can't remember.
All right. I will very
Good
quickly
luck. I might show up.
stop share and come over here and
Good luck. I might show up.
Tiffany, how do I make you a co-host?
If I recall, I believe you have to go under my screen or my name, and somewhere in your mouse you click, and it gives you the option to make me co-host.
Okay, I'm looking super quick right now. Oh, I found you. Make co-host. I did it.
Perfect. I'll control the
Okay,
room
thank
and
you.
silence.
I'm
Thank
going
you.
to go back to the slides. Thank you so much.
Of course.
Okay, for those of you who just came in late, really this is the first slide. I'm talking about income. If you could go ahead and put your name and email in the chat, that would be great. If you could remain on mute, that would be great. But if you have any questions, put them in the chat. And these slides will be available. So I will send them afterwards as follow-up. And with that, we're going to talk more about this Form 1099, which reflects income. And so one thing I want to say is, let's say you get more than $600, you get 1,000 or you get 2,000 or whatever you get, could be a lot more depending on how many children you have on subsidy. If you do have children on subsidy, if you don't get a 1099, you still have to report the income. So I just want to flag that you're not kind of off the hook. It's just that in theory, when you get the 1099, the people that issue the 1099, they also report that to the IRS. So you want everything to match. The other thing that I recommend is if you do get a 1099, that you double check it's for the right amount. Not that I think people would intentionally make a mistake, but sometimes they could. I have had times, frankly, where I got a 1099 and it didn't match my own records of what I thought I got. And I contacted that organization and said, hey, you sent me a 1099 for this, but my records show that. Can you double check? And then they come back to me and say, oh, my bad. You're right. We'll issue a new one. But because they sent it to the IRS, if you look at the top of the 1099, there's a box that says corrected. So they would have to check that box, issue a new 1099, and then send that one to the IRS. So my view of it is I trust but verify. Somebody sends me a 1099. I maybe get out my list. I compare that to what my records show. And if there's any discrepancy, I reach out and say, hey, can you double check this? And sometimes they come back and they say, oh, whoops, so sorry. So just a good example of trust but verify. The records you keep are important. Even if you don't get a 1099, you still have to claim it. Sometimes I get people who forget to send me one, and then I have to contact them and just say, hey, I haven't received this form yet. Are you sending it? And then they do right away. So sometimes that happens, but I'm just kind of putting it all out there so you're aware of it. Okay. So next, we're going to talk about the Schedule C and the 1099 information, like where does it go? So you saw here that it was $3,000. And now I'm showing you that $3,000 goes on the Schedule C form on line 6, which says other income. So these forms, they work together. And I have a larger screenshot on the next screen, but I just wanted to show you, hey, here's this form. This is what it looks like. Here's the 1099 amount, and here's where it goes. And so here again is just a larger screenshot, just showing you exactly where on the Schedule C that it goes. Now, if you look at the green arrow and it says income from parents, that line on the Schedule C says gross receipts. So the money that the parents pay, that's kind of, not that your other revenue is fake, but that's kind of your main revenue. So I always recommend put the amount that you receive from parents on that line number 1, where the gross receipts goes. The form is written for everybody. It's not written for childcare. So you don't sell anything, but it says gross receipts or sales, and think of the parent tuition payments as your gross receipts. And then any 1099s that you receive that reflect other income that comes into your business, you put those amounts, like maybe you had 2 1099s, so it's not just 3,000, it's 6,000 in total. Then you would put it under line 6 on other income. So business expenses, we talked about income, and now we're going to talk about expenses. Expenses are deductible if they are, and this is the IRS terminology, not me, if they are ordinary and necessary for your business. So that's kind of the guardrails. Like if you need it for your business, then it's necessary for your business, and it's going to be either 100% deductible, depending on what it is and how it's used, or it's going to be shared. And I also have some slides about shared expenses, and shared expenses are fine. So in general, the concept is that you're running a business out of your home, and there are costs to running that business, like cleaning or maintenance or repairs or insurance, accounting software if you have it. Those are expenses like totally related to running your business, and they are reported on the Schedule C because they're 100% deductible. If it's a shared expense, like let's say you buy a washer and dryer and you do laundry periodically, or towels related to the kids in your care, but you also use that washer and dryer for your own family, that's absolutely fine. That's what I call a shared expense. It's not 100% business, but it's shared and it's partially deductible. And I'll go over how. I've got a couple of slides on that. But this is just the basic concept that the first part of the Schedule C has income and the second part has expenses. So what I've developed is a worksheet. And I just, in working with family childcare providers over the years, feel like sometimes an explainer is good. These forms are, well, they're government forms. Need I say more? They're sometimes easily understandable and sometimes not so understandable. So I've taken the Schedule C and done kind of a description of all of the items that are reflected under expenses, like advertising. That one's pretty clear. We all, likely know what advertising is. But, some of the others, it might not be so clear. Like, car and truck expenses, you're going to be able to get 70 cents a mile, but you have to keep a record. I have a slide on that, but, keep the mileage. Like, commissions and fees. Again, these forms are not designed for family childcare, so not every line item is going to apply to you. That one maybe you skip. Contract labor. Maybe you pay someone to help you out. Maybe they set up your computer, or you got a problem with your printer and you call somebody and they come over and they charge you $50 to, fix the printer. If you use that printer for your business, then that's, a business expense. Insurance. This is not where health insurance goes. On this Schedule C, insurance really refers to if you have business liability insurance or you have professional liability insurance, it's that type of insurance. So these documents, they kind of work to explain what's on the form. And I have at the bottom right, you see a kind of oranges peaches box that says Schedule C expense worksheet. I have it in English and Spanish, so you can download it. You can print this out. It's a PDF, but it's basically an explanation for each of the lines under the expenses. Office expenses. So as a family childcare provider running your own business, you may have a filing cabinet. You may have those manila folders. You may have, paper, printer, toner, computer, pens, highlighters, other things that you use to, keep your records or operate your business. So those would be office expenses. There's, let's see what else. Oh, one thing I flagged is a line that says travel and meals. That is not for kid meals. So that's why I circled it. It's line 24. Kid meals go in a different place and I'll show you where. But this is for like travel and meals. And those type of meals might be 50% deductible. Whereas when you're feeding kids in your program, you are able to deduct a much higher amount. And I actually have a slide on that, so I'll go into it, in more detail. On the right-hand side, it says tax tips. This is a resource website, and DFD, the Division for Family Development, pays for every registered family childcare provider to have access to this resource site. Within the site, there's a family childcare toolkit. You can access this toolkit. All of the resources that I mentioned are also in the toolkit. I've put links in the slides, but they're also in the toolkit. So it might be helpful to you. The IRS Schedule C expense worksheet, I've circled it in red, English and Spanish. It's the same that I'm linking in these slides, but just to show you that this website is also available to you and you might find it helpful. Common expenses. Playroom expenses like toys, books, child furniture, cubbies, organizers. Maybe you have a bathroom that the kids use. Bathroom towels, soap, toilet paper. Activities like art supplies, maybe paint, crayons, games that you have that the kids play with, and office supplies already talked about. All of these things are expenses that commonly are taken by family childcare providers. So think, what are you purchasing for your program? You need to keep a written record, but what are you purchasing for your program? And chances are it's either 100% deductible if it's used only by the kids in your program or by you to operate your program, or it's at least partially deductible, which I call a shared expense, if it's used sometimes by the kids in the program and sometimes by you or your family. Like, let's say the den. And in the den, you have, let's say, a PlayStation. I don't even know if that's popular anymore. I think my kids are doing things online. They're older, but anyway, let's say you have a TV and a PlayStation. If it's only used by the kids in the childcare program, it's 100% deductible. If your family also uses it, like at night on weekends, then it's partially deductible, and that's okay. So let's go to using the Schedule C for business expenses. And again, these are expenses 100% used for business. So here's the Schedule C on the left. And I've just kind of crosswalked over like advertising for $100. And there's a line and you can see it goes right to line 8. Or contract labor, paying somebody like snow shoveling or mowing the yard. You could apply when I say partial expense, it's technically something called the time space percentage. And I'm going to go through that with you. I have a couple of slides on it, actually. So a portion of it, at least, is deductible. Or if it's like the computer example I gave, like the printer's not working and you use that printer for your business, and you paid $50 for someone to, fix that printer, that would be a contract expense. Insurance, I talked about that, business liability, and you can see that goes on line 15. Office expenses, I separate those out from office expenses, like things I would directly use, like pens, highlighters, stapler, paper, my computer, things related to running your business, versus supplies. Like supplies used in your program could be paint, could be crayons, could be colored paper, could be maybe you have a sandbox that the kids play in, things that are used for the kids that are considered supplies for the kids in your care versus supports that help you run your business, if that makes sense. And then other expenses, which I have last, it's line 27B. I put down 1,000 in this example. That's where you put the kid food, any snacks or meals. And since I have a slide on that and there's a little bit more detail to it, I'm not going to get into it now. I just want to show you on the Schedule C where it goes. And it goes under other expenses. I know it seems like a lot, but if you track expenses, then it's easy to like move things over to the appropriate line in the government form. I do have a monthly expense log. And what I tried to do with this, it's in Excel, but what I tried to do with it is line up the columns for, like advertising or, office expenses. But in the same way that the Schedule C lists the allowable expenses, I set up the Excel spreadsheet. You can download that Excel spreadsheet. You can make it your own. You can edit it. You can add columns. You can delete columns. You can, enter it monthly, however you want to do it. But what I suggest to you is it is really a lot of work. It is really hard if it gets to be, February or March and you got to go through all your paperwork from the year. What I suggest, one thing to think about in going forward is, so you get by this year and maybe some of the templates I'm giving you are helpful, but in going forward, once a month, spend an hour on a Saturday morning and make sure that you're tracking the expenses, and knowing how they relate to the tax forms can be really helpful, because then you can keep your records in a way that matches that. Then a year from now, you're going through it and you're like, wow, this is so easy because it's already organized and you've got the records that match. So just something to think about, for the future. Otherwise, now you're in a situation of, looking at your expenses and putting them into categories and then seeing how do those categories relate to the forms. So again, I mentioned shared expenses. They are deductible. And what are they? And, the example I can give you is there are probably a ton of things that you have in your home-based business that are shared. And being able to deduct them, at least in a shared way or partially, is better than no deduction at all. So I would be thinking of all of these things that are shared expenses and making a list, because at least you'll get a partial deduction. Maybe it's not used 100% for your business, and that's okay. I gave you the example of the washer and dryer. So here's another one, the dishwasher. Most people have a dishwasher, and you probably use that dishwasher for the kids in your care. And you also use it at night and on weekends for your own family. And that's fine. That makes it a shared expense, and that's good. So I listed a bunch of common deductions of generally, shared expenses. Let's say you have a den that's used as a playroom for the kids, the toys, the rug, the furniture, the books, the materials. Maybe you've got a lamppost in there, things that you've purchased for that room. If it's used only for the kids in your care, that's 100% deductible. But if it's used also by your family, then that's okay. It's partially deductible. And I'm going to go through how much of a deduction do you get. I'm going to go through that. Outdoors, things like lawnmower, rake, shovel, fence, patio furniture, outdoor toys. I mean, this is a long list of things when you think about it. Same thing with the living room. Maybe the kids in your program don't go in the living room. Maybe that's one of your rules. You can be in the den, living room's off limits, master bedroom's off limits. I mean, you set the limits of which rooms in your home are open to the kids. But depending on what those rooms are and what the items in those rooms are that you purchase, they could be either wholly or partially deductible. Goes for the garage. A lot of people have a extra freezer or refrigerator out in the garage, and other things. House-related deductions like property taxes, mortgage interest, rent, utilities, like gas, electric, water, sewer, cable TV, Wi-Fi, all of these things. They're partially deductible. And the reason is because you work out of your home, but you live in your home. So that means these are things that are shared expenses. And again, that's okay. So I'm going to show you all of the shared expenses are reported on Form 8829. I'm going to show it to you and go into a little more detail. So we talked about shared expenses, and we talked about, so how much of that expense can I take? Like, what am I eligible for? That's kind of the key question. It comes down to something called the time-space percentage formula. And this can be complicated. So I actually have maybe 3 slides that break this down. But let's start at the beginning. The time percent. One of the things I feel like I talk to family childcare providers in a bunch of different states. I work across states. And if I ask providers.
Sorry, Grace, there's a question
Yep.
in the chat box.
Sure. And what's the question?
It says, question please, are home insurance and mortgage deductible under shared expenses?
Home insurance is a shared expense and mortgage interest is a shared expense. Yes. Yes. Okay. So the time, when I ask people, the number of hours that you work, people say, well, I open at 7 and I close at 5. And I'm like, no, 7 to 5, maybe when you take in kids, but most providers I know, they spend time outside of the time when they're, caring for kids. They're planning the week. They're planning, they're billing parents. They're keeping their records. They're cleaning their house. They're, maybe going shopping for food for the kids in their program. Maybe they're attending a training. I mean, all of the hours that represent the time that you take to spend to operate your business count, not just the hours that you take care of kids. So what you should do, and if you look at the very bottom, I have this, it's actually a screenshot of an Excel worksheet. I call it a time tracker. But I have the first column on the left in green says daily time with children, and I write that down. Let's say it's a standard, 9-hour day. Here are some of the other ways that you may spend your time, and you should track it, because the greater the time and space that you have in your home, the greater amount of the shared expense you're going to be able to take. So the examples I use in my time tracker: cleaning. Everybody I know, they clean before the kids come and they clean after they leave. I mean, and that takes time. Laundry, that's frequently done. Preparing lessons. What is my week going to look like? What activities, am I going to offer? What am I going to do? Admin, like paying bills, contacting parents, managing accounts, training. Maybe you've done professional development. This webinar that you're on right now, it's supposed to be like 90 minutes, I think. So that 90 minutes, that should be in your time tracker, because this is work. This is helpful to operating your business, hopefully. But maybe it's CPR training, or maybe it's a different type of training you're going to. Shopping for your program. Webinars or Zoom meetings. Research. Maybe, I'm making this up, a child is interested in dinosaurs, and you spend some time on the internet looking for articles about dinosaurs, or maybe good books about dinosaurs, or maybe art projects about dinosaurs. That's time you're investing into your business, right? So, log that time. Yard care, lawn care, shoveling snow. The reason I use that is most people operating a family childcare home, you care about what your outside looks like, just like you care about your inside. Parents drive by and they see some kind of dump, then maybe they don't want to leave their kids, there. So to the extent you're gardening, or to the extent, you're mowing your lawn, or you're, shoveling snow to make sure kids can get into your drive or down your walkway or whatever, that's work. Write it down. I call this other last one parent engagement, but what I mean by it is most providers I know, they might be in a hurry when they drop off their kids, unless something happened the night before and the parents want to tell you about it. But when they pick up the kids, they might linger. They might want to talk to you. Well, if you close at 5 and you're still talking to parents and it's 5:45, jot it down, because this time adds up. So I also have a category called other. I mean, you can download this spreadsheet in the time tracker. I have it in English. I have it in Spanish. You can make it your own. But the point is, every minute counts. You should log it. The time you're in business, it's not just the time that you care for the kids. It's all these other things that go into the operation of your business. So the next thing is the space percent. How much of your home is used for childcare? So there's really two questions. One is how much space is used regularly? Like, let's say there's an upstairs bedroom or two that you use for kids to take a nap. And they take a nap, maybe every day or maybe every other day. But if it's regularly used, then that's counted. You might have some other space that's called exclusive use. This is a room that maybe it's your basement, whatever it happens to be. And it's only used for the kids in your care. Like, I used to have a friend who operated a family childcare program, and she had set up her basement as like a classroom. And she really didn't use that in another way. So that would be called exclusive use, because it's space in your home that's used only for the kids in your care, not, also by your family. And then what you do is you multiply that time by space. And again, I've got a slide on it to show you how it works. But the main concept is if you spend $50 on arts and crafts supplies and you use it for 100% for your business, then that's a $50 deduction and you put it on Schedule C. If you spend $100 on toys and you use it for both business and maybe your own kids play with those toys too, then that's a shared expense. And if your time space percentage was 60%, that would be a $60 deduction. Okay, so it's not 100, but I'd rather take the $60 deduction than none. So that's still a good thing. And that shared expense would go on Form 8829. Now, let's say you bought a $50 sweater for yourself. That doesn't get you anything because that's considered a personal expense, even if you wear that sweater while you work. And so it's not deductible. The only exception to that would be if you got really creative. I've seen some people do this, ordered some t-shirts and maybe it says Miss Susie's Happy Place or Miss Susie's Learning Center. And you wore that t-shirt, or maybe you got a sweatshirt and, you wore that and had a nice logo and everything. That would be considered a uniform and that would be 100% deductible. And so it really depends. Sweater for yourself, like I'm wearing a sweater right now, nothing. But if it's considered a uniform, then it's completely deductible, actually. So just a reminder, if you want to download this time tracker, you can make it your own, download it, edit it, but please, please count all the time that you work, not just the time that you care for kids. Okay, so we're going to take a closer look at the time space percentage. This is a screenshot of the Form 8829. All these IRS forms, they are assigned numbers, but this one is called 8829. It's for the business use of your home. And it's just kind of what I was telling you, how much square feet is used for your business, include your garage, if you've got a fridge out there, your deck, if you use a deck for, your childcare kids, total square foot in your home, then you divide it by the total space and you come out with, multiplying the space by the time and you get a percentage. And it's that percentage that is used against the shared expense to see how much you can take. Now, sorry, I had this really bad cold last week and I'm still kind of a little bit coffee with it, but I'm doing my best. So I've got the next slide's going to show you in more detail. So this is kind of just conceptual, but I wanted to show you this screenshot of the form so you know where these answers go. And that you understand the concept that this time space percentage calculation is super important because the bottom line to it is it gets applied against your shared expenses. And that's directly connected to the dollars that you can deduct for that expense. So the Form 8829 worksheet, which is this document that you see where it has a screenshot of the form and then some description on the left-hand side of what goes where. This is a PDF document. It's available in English and Spanish. You can download it. I also have a time space percentage worksheet, which you can also download, which helps you get the same answer. It's just two different types of documents. One's an Excel spreadsheet and one is a PDF, just kind of verbiage document. And then on the right-hand side, I just have examples of this online shared resource site that has a family childcare toolkit because there's a tax tips section and all of these resources are also there. So you can access them online. So this is a worksheet that I created that actually helps you calculate your time space percentage. So this is in Excel and the green, that's where you would enter information. The blue, I've already pre-populated with formulas, so you don't have to touch that. You don't have to add, you don't have to subtract, you don't have to multiply, you don't have to do anything. This will make it all happen, but you do have to put in the information. So for example, in this example, total hours caring for children during the month in January was 258. And this is based on 60 hours per week with the kids. Maybe you work less, maybe you work more. Then total business hours when children are not present, that's another 60 hours. That's a lot to leave out if you're not counting it. So make sure you keep notes, keep a log on the time you're not with the kids that you spend to operate your business, because that counts too. Then in total, that's 318. So the percent of time is 43.6%. You don't have to calculate that. Everything in blue will be automatically calculated. The cells in green, you would need to enter based on your own information. Then you get to part 2, which is the space. Okay, we got the time piece. Now we get to the part 2 space piece. So space, 100% used for childcare. These rooms are exclusively used for childcare kids. Maybe you have some, maybe you don't, and that's okay. But if you did have an area that's 100% used for childcare, you put in the square feet. Then you put in the total square foot of your home. And it's a blue cell, so I've already done the formula, and that will say, okay, this is 40%, does the calculation for you. Then part 3 is mixed use, like the den. You know, the childcare kids use it during the day and you use it at night and on weekends. So it's a shared expense. So total area mixed use is 1,500. The total square footage of your home, again, is 3,000. So that winds up being total mixed use space is 50%. So then when you come down to the bottom, automatically this will fill in for you, because I've pre-populated based on you enter the information and it will carry forward down below. So in total, the time percent multiplied by mixed space is 21.8%. The formula gets there because it takes the 43.6% from part 1 and it multiplies it by the 50% by part 3, which gives you 21.8% for mixed use. Then exclusive use, that's a different calculation. It's in addition. That's 40% in part 2. You see that in blue. So that goes 40%. Then you add the two together, that's 61.8%. So, you know, if you bought, you know, something for your kitchen for $100 and it's a shared expense, you would be able to deduct $61.80. I mean, that's a good deal. It's going to vary on your exact situation. Could be higher, could be lower, but this is just an example. You can download this worksheet. You can make it your own. I just wanted to walk through with you how this time-space calculation works and how you use it. It's applied to the shared expenses, and it tells you how much you're going to be able to take as a deduction for that expense. So down below, Form 8829 worksheet, people learn in different ways. So I'd like to provide resources in different formats. The first one, this is just in English. Here's the Form 8829. Here's the directions next to it about what it's really calling for and what it means. That's in a PDF. Then the time space percentage explainer, which I call a one-pager, just to the bottom line. Time, you know, times space equals X. That's how much you get. And it's all kind of concise in a one-page explanation. So it's not a worksheet. It's just, I call it an explainer. So again, all these resources are in the Family Childcare Toolkit online, and you can access that. You can download them, or from the slides, you can download from the links. So let's see. Now we're going to, this is the explainer worksheet. So here's the part 2 piece of expenses under the 8829 form. And to the left, what you see is, oh, mortgage interest. Where does that go? It goes on line 10, deduct mortgage interest. I think someone asked a question on that. Real estate taxes. You know, where does that go? Oh, that's line 11. So you can see on the left it's maybe a sentence or two about each category. Whereas if you just go with the form alone, sometimes it's, 2 words. And if you know exactly what that means, great. But if you have this on the side that explains it in a little more detail, sometimes then you say, oh, so that's what they're looking for. I mean, to me, the forms are kind of government-y. And so that's why I did these worksheets, because it puts it in plain language and explains what is that form looking for. So the top part of this form is related to time space. The bottom part of this form is related to expenses. And then you get down to line 24 and it says multiply line 23, which is all of your expenses, by line 7. You don't see line 7, but that was your time space percentage. And that gets you your grand total for deductible expenses, which is a good thing. So line 36, allowable expenses for business use of your home. That's kind of the bottom line to your time space percentage applied to all your shared expenses. How much money does that represent? And that will be reflected on line 36, and you carry that right over to the Schedule C and you put it on there. And so the forms are related, but they are different. And again, down below, I'll just say I have links to the worksheet in English and Spanish. The Schedule C is in Spanish, as well as English. The 8829 form, it's annoying. I'm sorry. It is not also in Spanish. So I did the description of what goes in the 8829 form in Spanish, but I did not have a Spanish version of the 8829 to screenshot. Otherwise, I would have done that. So I apologize, but the IRS, maybe someday they will do it in Spanish, but as of right now, they don't. So this is just an example of the 8829 form and what goes where. Like, line 10B, oh, that's where the mortgage loan interest goes. Line 11B, that's where the property tax goes. Line 18B, insurance. Oh, okay, that's my homeowner's insurance. So these things, they make sense when you break them down, but without breaking them down, it can sometimes, feel like a lot. I know. What I can tell you is there's also something about depreciation, but I could do like a whole hour-long webinar on depreciation, so I'm not going to get into it. But what I would tell you is basically if you have an expense over $2,500, you probably want to depreciate it. And I would recommend you talk to a CPA and get help. And if you do, a CPA is deductible, so that is not a bad thing. I think, to me, the bottom line is not you leave this session as some kind of tax expert. That's not my goal. My goal is so you have a basic idea of, oh, count all my time. Oh, so this is what the forms are looking for. Oh, so these are the types of expenses I should be thinking about. That's my goal, is to make sure you understand kind of those concepts so that you can begin to collect these materials and you can have that discussion with a CPA or H&R Block or your husband or your wife or, whoever helps, do your taxes. You can't have that discussion unless you have a little bit of knowledge. So hopefully that's what this will help prepare you to do. So when do you Schedule C versus 8829? So the Schedule C is on the left. That's for 100% business expenses. And the 8829, that's on the right. And that is for all of your shared expenses. So then there's car expenses. There's always like something extra. So I'm going to talk about cars and food and a few things separately. So car expenses. There's really a couple different ways to do this, and I can't tell you what's best for you. You can ask a tax preparer in your situation what's best for you. But I can tell you from my perspective, and again, it's only opinion. There's a lot of record keeping when you run a business, and if all you have to do is track your mileage and then you can multiply your mileage by, what's allowed, it's 70 cents a mile for 2025, and you can take it. And you don't have to keep like every single receipt. So that's kind of the vehicle expense standard mileage, efficient way. On the other hand, maybe you like record keeping. Maybe you love keeping receipts. Maybe you've got a super organized way to, have them all in one place. You may find that by keeping all of the receipts, you're able to get a larger deduction. I don't know, because I don't know your financial situation. I think it's a good question for a tax preparer. But basically, if you do keep all your receipts, then you have to keep your mileage. So let's say you travel 10,000 in a year and 2,000 of that is business. That means that gets you a 20% deduction. So your receipts times 20%. For me, I just cut the hassle. I'll take, mileage deduction based on 70 cents a mile and just go with it. But that's a personal preference. It's not like a business, decision. You got to do what's right for you. I will tell you, my kids, they laugh at me. They're all in their 20s now, 3 kids, but I keep a little notebook in my glove compartment. And for business travel, I'm just jotting down, the date, where I went, mileage. And then it becomes really easy, monthly, just tab it up, and then I keep my records monthly. At the end of the year, I'm in good shape. My kids will be like, Mom, what are you, like, elderly? Like, why? There's an app for that. Why aren't you using an app? So I will tell you, there's probably an app out there that does it for you, and you just like tap it when you're traveling for business, and it automatically records it and and will aggregate it and then spit it out at the end of the year. So maybe you want to Google, there's some app. But for me, the easiest thing is I just keep a little notebook in my glove compartment, and it's super easy. It takes me 2 seconds, and I'm glad for it, like at the end of the year. So it's fine. To claim vehicle expenses, your vehicle can be
Eli, ¿qué tú estás haciendo?
What? Oh, okay. You can deduct 100% of the costs if your vehicle's used 100% for your business. Most family childcare providers, that's a shared expense. They use it for a car for themselves, and they also pick up the kids, or maybe drop off kids to activity or something. I know many do drop off or pick up for school, depending on bus schedules. I will say there's something new in 2025 to 2028. There was a new law that was signed in July of 2025. And so now there's a deduction, a new one, for up to $10,000 for interest on new cars. But the car has to be purchased in 2025 or later, and it can only be a new car. It can't be a used car. And it's only for cars made in the US. So if final assembly is in the US, then the car qualifies. Otherwise, it doesn't. So I mention it only because this is new. It's brand new. Anyway, I put that out there. It may or may not apply to you, but it was in a new law that went into effect in July. And there's also income caps subject to it. If you're single, I think you have to make 100,000 or less. And if you're married, I think it's 200,000 or less. So I just put it out there, but no, that's new. And it may not affect anything, because if it's a shared expense, you're only going to get you're only going to get that time space percentage applied to the interest anyway. But I put it out there because it's new. So the food program. I really like talking about the food program because I don't know if people are in it or not. Officially, it's called the Child and Adult Care Food Program. Most people just call it the food program. This is the United States Department of Agriculture sends funds to states. In New Jersey, it's the New Jersey Department of Agriculture, and they partner with a lot of the childcare resource and referral agencies to sponsor family childcare homes who participate in the food program. So with the food program, it runs a little differently than when you do your taxes. If you participate in the food program, any reimbursement you get has to be counted as income. But that's okay, because you're also going to get a deduction, and it's probably going to exceed the amount that you received in income. So it's still going to be a good deal. On your taxes, there's a meal allowance for the kids in your care, and it's actually more generous than the federal food program. But you take the 2025 rates, so it's $1.66 for breakfast, $3.15 for lunch or dinner, or both, 93 cents per snack. So in the IRS forms, you're allowed to feed the kids a breakfast, a lunch, a dinner if they stay, and 3 snacks. In the food program, it's not like that. You might get 2 snacks and a meal. That's it. But this really adds up. So just thinking about the math on it. So a child eats breakfast with you and lunch and has 3 snacks. That's $7.60 a day. That's $38 a week. That's $1,976 per year. And if you have 5 kids, that's like almost $10,000. That's big. That's a deduction. If they eat dinner with you, it's even more. And you might have more than 5 kids. You can only have 5 at one time, but let's say some of them are in shifts, So you might actually have 8 kids. They're not all there at the same time, but there could be 8 kids. So this can really add up as a deduction. I do want to flag your own kids don't count, so you don't get a meal and snack deduction for your own kids. I will say, when you think about the 93 cents per snack, I'm not telling you to do this. I'm just saying, like, seeing it. I knew a family childcare provider one time, and as the kids left, she'd give them each 2 Ritz crackers, right? And they would be happy, and the parents would be happy because the kids would have a little snack, and out they go. Well, you can probably get a box of Ritz crackers for like $2.50, and you're getting a 93-cent deduction for those 2 crackers, not the whole box. So when you think about it, there are little ways that it adds up, like popsicles in the summer when it's hot out. Kids love popsicles. And then you can go to Walmart and get like a bag of those stick pops, and that's probably like $3 or $4. But kids could have 2 or 3 popsicles a day at 93 cents each as a deduction. You got to keep track, but you got to think, hey, this is, how this works. Now, a popsicle or the Ritz crackers, they probably don't meet the nutrition standards for the food program. So they don't qualify for reimbursement under the food program, but that's okay. The IRS has different rules as far as what you can claim for deductible meals and snacks for kids. And for the IRS deduction, they're not subject to a nutrition requirement. I mean, I'm very supportive of the food program. I think it's great to promote healthy meals and snacks. I'm just saying that it's also an option on these IRS forms that if you did use popsicles or Ritz crackers, that you could still, get the deduction. So just something to think about. On the FCC Family Childcare Toolkit that I showed you before, there is a meal tracker template where you can keep, attendance, and you can keep the number of meals, number of snacks per day, tally it by month, aggregate it by year. It's in English and Spanish. And this is just a link to the food rate for 2025. I've given you the rates in this slide, but if you wanted to go and see for yourself, you could see, what were those rates. There is another method, and that's keeping the actual food receipts. I can't tell you what is best. I can tell you, to me, it's less hassle just to go with the rates that the IRS allows. They're generous. It's good. on the actual food cost method, you not only have to keep your receipts, but then you have to carefully subtract out anything that's used personal. So let's say you got a dozen eggs, right? Comes in one container. But even though you make eggs for maybe the kids in your program for breakfast, maybe 4 of those eggs, you have your kid and yourself, and you use 4 of those eggs for you and your kid. Those don't count. So when you keep all your receipts, you also have to make notes about where you have to back out of anything that supported your family or your kids. So it's not like, oh, I went to the grocery store and I spent, $120. Yeah, you did spend 120, but how much of that was solely for the kids in your care? Because that is the way you would have to keep those records. So, it's for you to decide what works best for you. And again, if you do participate in the food program, you have to claim that as income. But you can see this deduction, it's worth more. So it's good to participate in the food program, and it's good to take the full amount you're allowed for a deduction. There's another thing I wanted to mention. It's called QBI, Qualified Business Income Deduction. I don't know if you're taking that or not, but I will tell you, this was just made permanent in that new law in July. And sometimes I talk to family childcare providers and then they haven't heard about it. So I just want to mention, like you need to know about another form, but this form is 8995 and it's about qualified business income deduction. Congress decided for people who are self-employed, we're going to give you a little extra benefit. And so it's a good thing. What I did on this form was said Miss Susie's happy place, and then qualified business income is, I made it up, 70,000 as an example. What this provision in the law gives you is a 20% deduction. So you would get an extra 14,000 that you could deduct. I mean, this adds up here and there. Scoop it all up. Take every dime that you can, is my view. So what I did was I took the form 8995 and I took that 14,000 and I brought it right over to the form 1040 and showed you, like, if you look at line 13A, that's where you insert that kind of self-employment deduction. It's called qualified business income deduction. So it used to be temporary, but now it's made permanent and it's at 20%. So if you haven't heard about it, I advise you to look at it. It's just an additional deduction that you get to take because you're running your own business. And every dime counts. So last, I'm kind of getting toward the end. On the left-hand side, I've got a bunch of free tax help. There are links to IRS slides and videos and forms and places you can, go for help on the IRS website. And then I mentioned before, I did some one-page explainers. So on the left-hand side with the 3 green boxes, that's the time-space percentage. And it's meant to be just super simple, easily explained, straightforward, all on one page. What is this thing about and how does it work? So that's what that is. And I did the same thing for the Schedule C and the same thing for the Form 8829. Just on the Schedule C one, it has a screenshot of the Schedule C form. And on the Form 8829, it has a screenshot of that form. You can also talk with a Spanish-speaking IRS representative. So I listed the phone number for the IRS. And last, this is again an overview of that family childcare toolkit that's online, where to find the resources. Here's a link. There are some explanations, like Tom Copeland, you may or may not know him, but I think of him as this amazing, he just retired maybe a year or two ago, but an amazing guy who spent 50 plus years working in the business of family childcare, helping people, strengthen their business skills. And he has done this question and answers about deductions. It's 2 parts. It's maybe 20 pages or something. It's really long. But chances are somebody's already asked your question. So, maybe it's worth downloading part 1 and part 2 and saying, oh, what are the questions that people have asked and how did Tom answer those? I didn't want to recreate it. I just thought, hey, I'll just share it with you. And then on the extreme right-hand side, tips and templates, it's just a summary of everything I've shown that you can download in English and Spanish, and some are PDFs, and some are Excel documents, and some are just, regular Word documents. I hate it when I'm going back to look at something I saw in a slide and I have to remember, well, which slide was that? So all of the resources I've mentioned, I've put on this one little kind of peachy yellowish bar so that they're all in one place and you don't have to be looking, was that slide 3 or slide 7? They're all right here in one easy place. So last, what I'll leave you with is finding a professional to help you prepare and file your tax return. Tom Copeland has a blog on that. You can check that out. There's a link. How to find and choose a tax preparer. Tom did a video on this. He went over important things to ask, important things to look at. The IRS has a list of certified people to help with taxes. That's in English and Spanish. I think it's a lot, but what I've learned is the more you understand, the better your questions can be. And frankly, a home-based business is a lot to it. Going to a CPA, it's deductible. It's likely worth it. But you can go in knowing a little something so you can ask questions. And if you have some basic questions and the CPA can't answer them, go to a different CPA. That's what I'll tell you. I think running a family childcare home is a niche business. It's not like, the business you serve your home for a consultant or, somebody who is, sitting behind a desk. I mean, you're really using your home when you're a family childcare home provider. And so there's a lot more that goes into it. So I always end with thanking Tom Copeland. I worked with him for a number of years. I feel like he was inspiring. I loved what he did to help, and I hope that I can help too. So I always, end with thanking him. And I am glad to take any questions. It was a lot, I know, but I will send around the slides. And make sure everybody puts their name and email into the chat, because that will help me reach back out and send you a link to the slides. And all of the resources I've mentioned, not only are they in the slide deck, but I posted them on the Childcare Aware of New Jersey website. They're under Family Childcare Resources. So you can find them easily, whether they're in Excel or PDF as a worksheet or one-page explainer, they're all there. That's where I'll put the recording of this session. And I already posted the slide deck there this afternoon, and the slide deck is in English and Spanish. So hopefully resources are helpful. I'm glad to answer any questions.
Hello, I had my hand raised. Besides the forms that you explained, we can add it then, the form 8995.
Hang on. 8995, that's the
Yeah.
qualified business income deduction form.
Okay, that's a form that we just added. We don't have to pay something for that form.
All of these forms are free.
Oh, okay.
So
okay. I just
these
want to
are
be clear.
Okay. All of these forms, they're on the IRS website. So what I did was, I just Googled Schedule C and I downloaded it. I Googled
Okay.
Form 8829, downloaded it. I Googled 8995, downloaded it. It's free. You don't have to pay anything.
Anything extra. Okay, thank you. And thank you for the class. Was very helpful.
Good.
Hi, Grace. This is
Hi.
Mike. Can you hear me?
Yes.
Hi. I just had a question. It was earlier in the presentation regarding your time tracker chart. It looked
Yes.
pretty helpful, but the only concern I had presenting some of those hours to the IRS was I understand and I agree thoroughly. Not only the time the kids are here, my wife does the daycare. I help her.
Yep.
But all these other things we do, cooking, cleaning, all that, I agree. But I noticed some of your entries were like 17 hours for one day, 19 for one day. And I kind of
You,
thought, could that raise an eyebrow with them? Because it's almost like the equivalent of two shifts.
yeah. So I was kind of just doing it. Um, I have it printed out just so I can look at it when I'm talking to you. I mean, I just did an illustrative example on the time tracker. And so
Okay,
what I
yeah,
tried to do was come up with columns that reflect what I know that you do.
I
But
understand.
like preparing lessons, for example, you might not do that every day. You might do that Sunday night, right?
Yeah,
Um, or laundry. You could be doing laundry every night, but and cleaning, you could be cleaning every day. But shopping for the program, probably not. There might be one
mhm,
day you pick to do that. Or admin. I know for me, I hate admin. I don't do admin every day.
yeah,
I might do it Saturday morning, right? So some of these things in my illustrative example, yeah, 19-hour day, that's insane. Although I've had some 19-hour work days.
I
But
understand.
this is meant to be illustrative and it literally takes you I want to say 5 minutes, right?
Yeah, no,
End
I
your
think it's
day. Before
that's
you
a good
brush your teeth
idea.
at night, end your day with boom, 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 right?
Yeah,
And you are done. And you'd be surprised at the end of the month. Those hours add up,
yeah, I understand.
right?
Okay, all right, that's good. It's good to keep a record and be aware of how much time and show them that, and that's it.
Yep,
Okay, all right, thanks.
sure.
Bye.
Patricia, I think I see a hand up.
Yeah, I already did my question. I'm sorry, I forgot to
Oh,
put my
you did.
hand lower.
Oh, no worries. I'm just glad to answer any questions. Hi, Joanne. Every now and then I see somebody I know. Thank you, Tiffany, for helping me.
Sorry, it was a pleasure.
I'm
Anybody
sorry.
else?
I'm sorry,
Sure.
Grace. So you said in order to get these is family childcare resources, you could just go on and get the slides and all that stuff. Is that what it is?
Yeah, I'm gonna give me 1 sec and I'm gonna put the Childcare Aware of New Jersey website in the chat. Give me
Okay.
1 sec. Okay, this is the link where all of the resources are. And I have already posted the slides there in English and also in Spanish. And I have already posted all of the resources I mentioned today in there. The only thing that's not yet posted is the recording because it hadn't happened yet. But once I'm done with the recording, probably tomorrow, then I'll post the recording there too. But all of the resources I mentioned are there, and the slides are there, and you can download them. And on these forms, they're free from the IRS, so don't let anybody charge you. $3,000 value free, all backed by a 30-day money back guarantee. Call 1-855-460-1519 or bring. Anybody else?
Nope.
No questions? Was it too much? It was a lot.
Miss Grace, I have a quick question.
Sure.
So I just started, I registered the business back in May 2025, And I got licensed for my family home daycare in October 2025, but I didn't get any children until this January. Um, I'm still able to have all those deduction or report it on this tax season, or do I have to wait until next year?
So that, yeah. Well, what I would tell you is you didn't receive income from your business until January, if that's when your kids came. So you can't take the 2025 deductions because you didn't have income from your home business in 2025.
Okay,
But
but
in
then
2026, when you
mhm.
go back to file, then some of those expenses will probably be allowed. What I would tell you is to go to a CPA and ask, because I don't want to give you bad advice. My view is if your business income didn't start until January, then the expenses, you might go back and be able to reclaim them once you actually have income, but you can't claim the startup until you have some income. But maybe if you go to a CPA, he may be able to say, here's how we would handle that.
Okay, got it. Yes, because I was a little
It's
bit,
a little tricky.
yes, because obviously I had to buy all the
Yep.
supplies and everything for it. So I just wanted to kind of have an idea before I got that situated. But okay, thank you so much.
I would advise you to ask
Okay, thank you.
because it may be worth it to you. And maybe they could say, well, you didn't have income till January. When you file in the spring of 2027, you can go back and reclaim that investment that you made in your business back in 2025. I mean, you may be able to do that. So I think it's worth asking,
Okay, thank you so much, Miss Grace.
but ask someone like who's a certified public accountant.
Okay, thank you.
Yeah.
I have another question.
Sure.
Um, so is two part. One, the first one is, and this is just real simple. I bought a couch. I think it was like last year. But I don't know. Can you claim that? I mean, we use it inside. Like I have a designated space that we use, but they still go in for the bathroom. If we're doing movie days, which we do 2 days a week, it's usually in the living room. But I don't know. I know you said some stuff is shared. So would that be considered shared, or I can't claim it at all?
I think it's absolutely shared. If the childcare kids sit on that couch, it's shared.
Yeah, they got Cheetos. It was light color. I'm learning. Don't I had it before they came, but they were eating Cheetos and popcorn cheese, and yeah, I was like, I can't even cover this up anymore. But
It's shared.
it's shared. Okay. And then my other question was is pertaining to what the gentleman said earlier. I know he was asking, he's like 19 hours is a way lot of hours, but you're still supposed to write however many hours, because I'm not saying it's 19 for me, but sometimes even without doing anything, you're right, parents come in, especially on a Friday night, and I've had time where it's almost like 45 minutes just chit-chatting, and it do happens. You don't think it does, but you look back and you're like, how many nights a week you're like half an hour just chit-chatting, and some are in the mornings too. But whatever it is, as long as you're keeping track, you claim those on your form, right?
Absolutely. I mean, what's important is to have a written record. And frankly, um, I know you do it because you're a friendly and nice person. And, parents come in, you have a personal relationship with them. Um, but let's face it, it's also part of how you operate your business. I
Right.
mean, you're an ambassador to your program. That's kind of marketing. Those parents could go out and say, oh, we love her. She's awesome. Right. And they say that because you've built that relationship.
Right.
And I mean, I have this one uh, who will go nameless, who, man, she could sit at my door for 45 minutes and talk. Right. And sometimes you're kind of running them out in a nice way, but like that time, it adds up and you need to make sure your records reflect it.
Okay. Then I have a question then. And I just popped in my head now that you said it. So you know we have um the kids, the login sheet that we do for the kids when they come in, when they leave. Now,
Mhm.
I don't, so when I do, and I know that's more for the state, but should you be writing on there? Because usually it's just when I open and if somebody's here till 6, like that, even though the parents are still here, I'll just still clock in 6 o'clock because I'm thinking that's when my program closed. So on that form, should you leave it the time you open, or if you're still there a little longer? Because I haven't been doing that. I just do if it's 6, I'll just clock it as 6 because I figure
I would,
7:56.
right. So it's an interesting question you ask. Um, if your time is 9 to 6 and you get subsidy or something and it's based on that time, I
Mhm.
think you got to reflect the time, right?
Right.
But there's no reason why you can't supplement that in like the tracker that I showed you so that it is more comprehensive
Mhm.
about your time. I mean, if the parent's there an extra 45 minutes talking to you, it's relationship building, it's operating your program, like I think you kind of that's not the type of attendance you submit to the state for subsidy,
Okay.
but it's the type of record that you keep for how you spend your time operating your business.
So log it 2 different way. Your records that you give to the state, and then you have your own for when it's this time of year.
I mean, yeah, I don't want to sound like I'm telling you to do something that's fake. It's not, it's just a different purpose. Like
Right.
time and attendance for subsidy is a completely different thing than whether you spend an hour cleaning before the kids come and an hour cleaning after they leave, and then you're doing laundry after they leave. And by the way, you've spent an extra 25 minutes or 40 minutes talking to parents on their way out. That isn't related to your subsidy payment. That's related to how you conduct the time to operate your business. So it's a different type of record.
Okay. That
Does
makes
that
sense.
make sense?
No, that makes sense. Okay. Thank you.
Now you're going to think, oh, she runs people out the door. I don't.
Thank you,
Okay.
Grace, and have a great
Okay.
one. Bye,
Well, have
everyone.
a good night. And if you have any problems accessing the resources, let me know. Um, let Tiffany know. My email's in the on the last page of the slide. Um, but you can also let Tiffany know. And now that I see Joanne here, you can let Joanne know.
Hi,
These are
Joanne.
my other friends I work with. Um, and have a
Hey,
good
Kim
evening.
and Kelly.
Hi,
Yeah.
Joanne.
Thanks for, spending so much time with me tonight. I know that makes it a
Thank
long day
you.
for you, but
Thank
hopefully
you.
it was good.
Thank you.
Thank you.
Bye. Thank you.
Guys.
Thank you.
Thanks,
Bye. Thank
Grace.
you.
That
Great
was
seeing you
very,
again.
very helpful. Very helpful.
Thank you.